All right, guys. So I'm short the euro dollar, and it's not a traditional trade, but I'll explain why I did it. So Friday's news, strength in the background, and a nice looking trend. And if you know my method, you're likely saying, okay, we're looking for, or basic VSA as well, looking for signs of strength to get into this trend. But that's why I use not only the 1 hour, but the 5 minute. And what it's showing me is, as we look through, it's not a healthy trend, as I say. Every move up is bringing selling, selling, selling. So we take a look at the higher prices yesterday as they came into London. Weakness, right? Higher price, weakness, and half an hour of sell-off, basically. Now it finally gets above that level. Weakness again, just simple by definition. High price, high volume, rejection, sell-off again. Now finally, let's see when it gets above that area. There's a little bit of volume. There it is. High volume, half an hour sell-off, or an hour. Higher prices, again, high volume sell-off and leading to a sell-off. Then we get slow Asia session and we get into London Open, or this is pre-London Open. So we have this high here, which brought some weakness. We get above it, weakness and a sell-off. And then we have this high, so you get the point. And here, there's not a lot of weakness, but I'm getting the picture here that really this uptrend is not what it appears to be. There's a lot of supply coming into higher prices. It's due for a retracement. And so that's what I was looking to do. So it is a counter trend trade or counter background. Typically, I'm not looking to go against a trend unless there's high volume, such as this one is obviously a very good example. You're moving down and you see the high volume sign of strength. Then I'm looking to go the other way from a 1 hour point of view. But to sell in this case is typically not what I do. But again, that's the reasoning why. And it's just understanding that even if it's just a retracement, it's a decent trade. And it is really due for that. And the market finally seemed to decide here that is due for that. It blew through a couple of levels without any issue. So the entry was here, which I take on the demo now in the room so everybody could see it. Stop loss. I'm looking for generally this area or maybe even a further retracement. Here we're getting a little no demand stuff, so we should be able to get through. But as I said, and on these more aggressive trades, I take a half position, usually a smaller risk. As I said, I may just move my stop to break even now because, I'm looking for the market to really follow through on its decision here to allow this to pull back and give a retracement of that trend. There's also a fib area it may go to. But low of the day, at least I'll be happy with. So I may move my stop to break even because really if we're bouncing off of here, we're pulling back to this point, we're kind of just going sideways and who knows what. And it is an uptrend and it may go for another try before it pulls back. So I may just move the stop to break even at this point. But this area, as I say, you want to test for demand and see a no demand in an actual area where buyers may show up if they're interested. And we actually have a sign of strength there. This was market open, London open spike in volume, so you got to take that for what it is. But it didn't change my bearish assessment of this trend for now. But if we were, what was my point? It's 4 a.m., 5:20. But if we get through there, likely going down, probably my stop to break even. All right. Oh, I was going to say is so the no demands. You want to see an area where buyers were active or buyers are being tested for their activity, and that's a support, and it's an area where buyers were active before. So that's why it's going to tend to pause there. And in this case, no demand, which is good, and hopefully follow through down to the low. This, for example, is not a no demand, even though you may look at it and say, okay, it fits the definition, some weakness, no demand, but it really needs to pull away and get to lower prices to be testing for buyers. Typically, the actual sign of weakness candle is considered too high, and pulling away is ideal. There are other levels to look at, but it just blew through. 50 EMA, 14 EMA was a bit high. So that's the case. So here we have actual pausing of selling, testing for buyers, and you see what they're all about. My goodness. Anyone in their right mind is not going to buy this right now. It's really all about looking to reaccumulate lower if you're a smart buyer. So that's the trade. So if I move my stop to break even, I'll get rid of the risk. And if this turns out a winner, then we're 6 wins and 1 loss since September return to the live trading sessions. Not a lot of trades, but definitely not complaining.